Thank you everyone for making a time this afternoon, or if you're on the other side of the world this morning. Delighted to have Idan Shmorak, CEO of UNT, here today to talk through the Q1 FY24 quarterly results that were lodged yesterday. We will be taking some questions from the audience, so feel free to put some questions to us at the end of the presentation using the Q&A function at the bottom of the screen. I'll now pause and I'll hand over to you, Idan.
Good morning, everybody. Thanks, Eric. Thank you, everyone, for attending this afternoon. I would start by sharing our presentation, giving a bit of context to our quarterly report to whoever emailed us and is not seeing it right now. We're happy to record this and to upload this later to our YouTube channel through our investor relations. So just a reminder to the ones that are new to the story, we create digital humans, B2B and B2C, with a subscription division. The business model for the B2B, which is what we see as the future of UNT, relies on 3 tiers. We sell digital humans to businesses through 3 channels. One is through a partnership channel. We work with partners in order for them to be able to resell our products, and we can technically connect them directly. And this is something we have been working on and we'll work on in the last quarter and the next one. We are doing enterprise subscriptions, which is our original and first business model, which we were happy to fulfill in the last quarter with tenders that we have won and companies that we have signed directly. And self-service, which is the outlook for the next year, which would be our catalysator to be able to reach many more users. The subscription is built from a setup fee and a monthly subscription. The enterprise subscription, they get custom features, they get adaptations for their brand, for their needs, while the self-service would be a standardized product, which I will elaborate a bit more on later, with a lower cost. If anyone has questions around the business model, you're more than welcome to ask it in the end of the webinar. But the goal of this briefing today is to share the achievements of the last quarter, to give some context around them, and to talk about the next one. So if we're looking on milestones, we have been developing and working on changing or becoming UNT in the last 2 years. And since then, we have been able in a very short period of time to create a product that works and that sells, together with our subscription division, which we have changed completely. We have enabled them, the subscription division, B2C, a subscription division that sells products directly to consumers that are built through their mobile carriers, to change their product offering completely, open new channels of sales, new countries. We're open in more than 33 countries today. And we were able to increase our revenues in a very large pace, marking 25% in the last quarter. And we have reached 500,000 signups on the new products alone in the last quarter. Together with that, we have a big 5 clients, a big 5 tech client, a very big company from their European office that is using our product. And we are working very closely with them in the last quarter, and we expect to do so in the next one in order to achieve a larger license. It's a big company, therefore the processing times are slow, but the responses and the usage that we're getting are very positive. We have signed strategic partnerships with a few partners. One of them was a company that is involved with a European grant provider, and together we have created the technology and received a grant. We signed this agreement last December, January, and this quarter we have finalized our achievements with them, the technical ones, and we have applied all the deliverables and got the full grant. Around the last spring, with the B2C division, we started a serious optimization measure. We took something that was outsourced, which is our user acquisition, and we took it in-house with the goal of breaking some glass ceiling in terms of potential revenue and potential reach, and stretching margins in the long term. This has proven itself to work. We were able to acquire 500 users, which is the fastest user growth in the history of the company. And we are able to expand to further countries, and we have, as I said, no glass ceiling in terms of expansion. When we look forward, and then I'm going to dive in to some items in the next slides, we look to take our platform to be something which is scalable with a self-service system, which we are developing, and I'll expand a bit more later. We are growing constantly a commercial pipeline, and we're converting it to contracts, and this is what we're busy on these days. Contracts across that we took 3 verticals or 4 verticals in particular in focus in the last 6 months, 1 year, which was health, e-lottery, / entertainment, because the functionalities are similar, and insurance, and of course entertainment when it comes to the B2C. And we intend to take this and we grow this. Together with that, in the health vertical, we have won a tender, and we are working on further public opportunities to scale our reach, as we see that together with the private sector, or also the public sector, they want to embed AI in their solutions. Everybody wants to scale their reach, and it seems to us from the market reception that we are getting that we're in the right place in the right time, and the clients, they want our services, and we're working on fulfilling the contracts. With the self-service platform, we would be able to actually serve more clients in a shorter period of time, because the onboarding with us is going to be much shorter and self-made by the client. We're very excited from this opportunity, and it's something that we have in the oven. Looking back on the last quarter, we have showcased digital human on our website, as promised in the quarter before. We made our product scalable, quality, and safe, which is very important for the clients that we work with. With the ability to use and process customer data, we need to work with the highest security standards of them all, and we need to have the system available 24/7, 99% of the time. So with that, there were a lot of heavy lifting items in terms of development to be done, and we're happy to achieve those in that quarter, being ready for the next step of commercialization. We made much further progress with the self-service, which is our engine for scale in the calendar year 2024. And we're on time to soft launch this system by the end of this calendar year, as we stated in the earlier months of this year, albeit changes in the way that we take clients, in the way that the market worked. And I must say that the team, the development team here in Barcelona, worked very hard. Although we onboarded further clients, further opportunity to lubricate our balance sheet and justify the market need for this, we were able to not only deliver custom-made solution for the clients, but also keep working towards a standardized product, which is a major achievement. And kudos to all of the team members that would probably watch it a bit later, because it's 7:40 a.m. here. With the commercial development, there has been a lot of work done and a lot of heavy lifting. We've created basically a business development team, a very small team that finds the opportunities, talks with the clients, and not only brings contracts and tenders and partners, they also bring market insights. What should the standardized version include for this to sell and sell easily? There's more work to be done there, but it helps us to position ourselves and avoid the biggest risk for an early stage tech company, which is wasting time developing something that no one needs. And we are very proud in developing a solution that people use, and we see it by the usage time, we see it by the subscription rate, both in both the division and with the client's feedback. The contracts that we've been able to run over a few verticals, but it is focused on customer and employee intimacy. It means that if we have an e-lottery company or a remote patient monitoring company or an alliance for public health that does delivery of crucial information and preventing the diseases, they are all trying to reach clients, patients, even the people that work for them, employees, and get their attention and deliver crucial information in a human way. And we're able to really help them do that. And we work closely with them to develop a solution that fits them and helps them the most, but also to get the insights from the usage and get what works, what gets a conversation going, and put it in the standardized system with the self-service. We also signed two partners here in Europe. One is for a kiosk, an edge device that would be able to contain the digital human. And the second one is HoloConnect. It's a hologram company, basically a human in a box, in a glass box, and you would see it in a hologram. And these partnerships are just not just for show. We are submitting with them for big tenders, and we have a reseller agreement. So it allows us to, when we go to market, to provide a kiosk together with those partners. But for them, as they provide edge device experiences, they have digital humans in their portfolio. And this is just the beginning. And this is partnerships that we've signed in the last 30, 60 days. And we intend, as we take our go-to-market much faster now, and we would be able to do this with much further scale. We'll be able to take this and sign more clients and increase the service partnerships number that we have, and with that, increase sales. Deliverables for BondsApp and Enviso. So the technical part, which was connecting the systems, which included a grant of 74,000 euros, was fully delivered. We also presented it in an AI conference in Amsterdam last month, and we got some very interesting questions and even leads from the industry in terms of partnerships. And we see with that our pipeline grows all the time. I know that the financial sector might not be as moving as fast as it did in terms of technology in the last 6 months, but in terms of the clients themselves and the progress and the opportunities that we have in the pipeline and everything, things grow, and we're very busy with those conversations, and we are converting them to contracts one by one, and we expect in the beginning of financial 24 to expedite this process and make it a bit faster, because we have a platform that helps us doing it ourselves, as this is the future of AI. And as now clients would be able to do it ourselves, we would work in 2024 for our digital human to sell themselves as well. And this is the next step, and this is the future. Looking at our revenue generation division, our revenue generating division, the B2C subscription division, they monetize apps through the mobile operators in 37 countries now. I said 33 in the beginning, but grew in the last quarter. With a variety of partners and languages, they create products in an industry that does not have innovation in it. So we are innovators in the traditional industry, which enables us to keep opening new markets, to have the best of engagement rates and sign-up rates in the industry, and enable incredible growth. We grew 5 times the user acquisition in 1 quarter. And we're able to keep doing so. There are costs associated with it, and a very big clarification is, of course, regarding the 4C and the financial report. There were high costs that were involved with a learning curve on how we buy users there and why. I would expand on that on the next slide. This is an important clarification. We took the media buying or the user acquisition. How do we get to users? What happens in the funnel between someone sees an ad on Google, they click and they subscribe, and what happens when they pay us? We took ownership on that entire process, which enable us to expand our revenues. And this is a legacy division that was profitable almost through its entire existence. And now we're able to stretch the margins of this profitability and increase the numbers in high rates, and we have a lot of faith in this company, and it's data driven. So what happened in this division through the last quarter? First, we grew revenue in 25%. It is associated with the increase in marketing or user acquisition expense that we have. When we go and we enter a new market, we buy a user that would pay, just for example, because it varies across those 37 countries. Let's say this user would pay in the end of the month $20. We start by buying it. There's a learning curve. We start by buying it in $30, but we go down to cents. And there is a learning curve in each market until we are able to buy users in a profitable way. I would not get into specific numbers per industry, but the average are always profitable. We do not get into a market unless we are, or we do not keep an operation and a market going without making sure it is 100% profitable and with high margins. And there is a learning curve which comes with capital investment in order to penetrate the market. So we chose a few markets that we saw as the hot markets in the industry, the rich verticals and the rich markets, and we chose to get into them. We shifted almost or a very big chunk of the entire user acquisition funnel that we have into in-house, and we would keep doing so because we have higher control or further control on how we buy, who we buy, and the long-lasting opportunities of that revenue. And we're increasing the margins in the long term. For every user, we would have bigger margins as the years grow and as we retain those users with us. Important to mention, there is a lag between the time that we acquire the users and the revenue. This lag could be up to 6 or 8 months. So it means that 25% revenue increase that we've seen today, it's a combination of a return of investment of things that happen in this quarter and the quarter before. Therefore, if we invested a lot in user acquisition and we saw 25 revenue increase in this quarter of the first quarter of financial 24, we expect to see further growth as we invested more. Now we are balancing our investment. We have made the learning curves in the markets that we wanted to penetrate, and we're not penetrating further markets with the same pace or the same rhythm because of cash consideration. And we have made sure that we have built a sustainable business plan to allow us to exist and remain profitable with this division while developing and investing in growth in the B2B division and the development division to have us run long term. I know that a lot of investors, I'm crossing off some questions from the end. A lot of investors asked us, and they said, "Whoa, we saw 2.2 quarters of remaining cash." In the statement, it is important to state that this calculation varies, or this calculation is derived from the expenses that were made in the quarter and other factors. And this quarter especially had a lot of annual and one-off payments, such as ones that are associated with our annual reporting, lease, and also the investment in that learning curve. So we are 100% aware of our cash burn, and we take in consideration the expected revenues and profits that would come from this division. We take in consideration expected rich contracts that we want to sign with the B2B division. We are aware of where the winds blow in the market, and there is always a delicate balance when we have a company in this size with this amount of innovation that needs to be done. And this balance says, how much are we investing and keep developing and keep the ball running and everything rolling in terms of commercialization, development of the system in a responsible way. So we chose to not increase the team in crazy numbers like another company would do, but keep it balanced with a very small team. The team that does this, by the way, and I remember a question that were submitted before, how many people are doing this B2C subscription division? We have 5-6 full-time employees there with 2 people doing the user acquisition. A very small teams running with very big numbers, and we keep intending to do so. The Barcelona team is a bit bigger from its responsibilities of building and maintaining super innovative machine learning and AI technology, but we keep it as narrow as we can and as responsible as we can. Looking forward, we're very excited for the next year. We are working on developing the self-service platform, the soft launch by the end of the this financial year, of this calendar year, would be for selected clients. We're going to take the clients that we onboarded, we're going to onboard some new ones, and we're going to let them create their own digital humans. And we're going to map the standardized needs for us to be able to get to a full release during calendar year, 2024. You can see some mock-ups, screenshots, but this is we already have a version that would be running very soon internally and externally by the end of the year. And the clients are craving that. Until today, we create the conversation for them, the head for them, we choose the voice, and it gives them a very simple mechanism with the release of that to be able to onboard themselves and change and to have an account and to look at analytics. And we're very excited, and the clients are really excited. to be able to receive this kind of system that gives them full control on the product, and would also enable us to sell to much further clients, or to target any business in the world down the road, and give them the ability to actually buy that. And they could start it in the beginning for free. They would embed it in their website. And then if they want to have a more exciting conversation, a better looking digital human in their minds, or from a nicer library, they would pay a premium account. And with our tech achievements, we would be able to bring the costs down, that any business would be able to buy that and to try that and to see the value that it brings to him, and would still have a very impressive EBITDA levels for UNT. And we have a very detailed business model on how that works, all the way from personnel to servers, all the way to marketing. We have a dedicated business development team that works very hard in going to clients, conversating with the clients, working with our partners, big and small, and getting the opportunities covered. There is always a built-in tension in a company like UNT, like any other emerging tech company. The tension between the wish to bring big commercial contracts and win, and the actual technical ability to fulfill them. And we are close, and then financially and calendar year 2024 would be in the right place, in the right spot, to allow further growth, both in numbers and both in clients, and most important of anything, with people using that system, getting value. And value is the name of the game here. The value that we give to businesses in their ability to reach clients, value that we give to their clients in their ability for information, and when value comes, also the willingness to pay by businesses. The subscription division grows. We have shown that to the market with a very big deliverable of 25% revenue increase in the past quarter. We look forward to first release further products. The first client of the Digital Humans division is the B2C subscription division in Amsterdam. They create products, and they are the first one to generate revenues out of those products. So we already have a product that was announced in Marbella in a conference of this industry last month of a travel guide, and we have a few others in the oven. More products means more markets, means more users, more revenue. We are increasing the margins through the in-house user acquisition, and we intend to keep doing so, again, with a very balancing hand on that needle that does the spend, because we're very aware of our cash position, and we confidently move forward knowing that we have booked revenues and that we have further commercial opportunities. I have spoken, I think, for 20 minutes straight, so I'll stop speaking now and would open the stage for a question. And thank you very much, everybody, for listening.
Thanks, Idan. Just a reminder to our participants, if you want to ask a question, to use the Q&A button down the bottom. I can see there are a bunch of questions coming through, lots around the business model for both B2C and also the Talking Head platform. Just while I do filter those and go through them, just one for me to kick things off, Idan, is obviously there's been a lot that's happened over the quarter. New Talking Head contracts, really accelerated user acquisitions in the B2C, and further progress on the self-service platform, very close to doing a soft launch. Obviously all important in their own right, but what excites you the most?
The traction. We see clients that see that and their eyes are opening, and we start seeing a real need for this system for digital humans across e-learning, across education, and across onboarding of employees. We see that with the Big Five client, and although we would be happy to share their name and to have further activities, things are going slow in that world, but we don't put all our chips on that one. But we do keep to deliver with them and to work closely with them. So commercial traction is my number one tech mark for that quarter. And for the next one, I must say that I'm sorry, and another one for that quarter is the growth of the subscription division. It was a very data-driven decision that we took back in the spring, But as data-driven as a decision could be, it is never comforting until you see the numbers working, and you can see the system and the signups. And seeing that signups gave us a lot of relief, but we're still very much in let's call it operational tension, ready to see how this goes. Where do we scale this? Looking forward, the self-service is an important catalysator. Clients are asking for it, and this would just enable us to sell to more clients, and to have more conversation with commercial opportunities.
Thank you. So quite a few questions coming through about the business model for the Talking Head platform. Some might be a little bit early and difficult to give answers on, but so with the soft launch, do you expect any revenue to come through this? Are you anticipating that you'll need to be offering pretty attractive pricing initially to win customers? And post that, maybe looking out sort of 12, 24 months, do you have some sort of pricing model in your mind of what this looks like when you've got a mature product?
Well, first, the self-service platform would be given to the clients that we already have on board, and for a few that are quote unquote waiting in line to be served. This is the first item. So in the question of revenue associated with this, yes, explanation mark, yes, there would be revenue associated with this. This generate revenue, or the current version of the platform today, even if it's not service, it generates revenue today already. We expect it to increase, and we expect to bring a more, I don't want to say basic, but standardized version for anyone to create a very simple conversation down the road in the beginning of the financial year, to be able to clients to just get the basic product that they want fast delivered on the website, things on production as we call them. And with that, there would be revenues associated. Looking a bit further down the road, we want to have a distributed strategy that brings clients not only as enterprise as we do today, which they pay around $1,000-2,000 per month, depending on the experience that they get. We want to get to smaller businesses, not only enterprise accounts, and to be able to get to pricing, which would be on the hundreds of dollars per month, associated with the value that they're giving. There is a difference if they do the entire onboarding system for their employees and their huge organization, or not huge organization, but let's say an e-learning platform, or if it's an ice cream store that wants to share its new most exciting news with a digital version of the owner. And we want to be able to serve all of them. And we've created a beautiful system from the inside and outside. And from the inside, I mean that it could be on really any computer and be used by any business. And we want to enable that. So we intend to present a system with much lower payouts that would aim to an incredible amount of customers.
Right. Just a couple more questions on that before we move to the B2C. Obviously, you talked about a growing pipeline. A question has come through, can you talk a little about the pipeline, what it looks like, how big it is, where the industries potentially are, and perhaps an extension of that is what sort of feedback are you getting from these, initial users?
So first, the pipeline grows in I think it was 3 times in the last 6 months, quarter. And it keeps growing because first we see a difference between the market a year ago and the market now. And the difference is that instead of going to clients and explaining them why AI would be good for their business, we get inbound traffic asking, how can we use your system and what exactly can we do with that? And there is a big difference. And with that, we see the traction. What the clients are asking for is the ability to control on the digital humans themselves, which is a part of the self-service mechanism system that we'll be introducing. And I hope I answered most of that question. Did I miss anything? Sorry.
No, that was it, Dan. Thank you. Just last couple on the Talking Head. Are you doing anything in education?
Yes, we're working with closely with more than one partner now in creating a combined system to embed ourselves with an e-learning system, and we have more than one partner and more than one continent that we're speaking with, and there are public opportunities in that space as well, which are very rich and long term.
Got it. And then just in terms of competition in that space, what are you seeing? And how is UNT stacking up, do you think? There was a question here about Meta launching AI chatbots, which had featured one of the Socceroos players here in Australia. And how does UNT compete with that?
So the same question has been asked by the Market Herald a few months ago. So a few weeks ago. So I really invite you to Google our ticker and their website, and you'll see a much elaborated answer. But in short, the entrance of big players to the personalized AI market is a blessing for UNT. It means that it strengthens the market need for a product like ours. It doesn't mean that tomorrow they are launching exactly a similar digital human that does the same thing. And even if they do, UNT has market expertise, UNT has experience, and UNT has and will have growing users, which makes us an interesting partner to start with, and even in the future an acquisition target. I don't think the market is there. UNT still has its competitive advantage in terms of how we do what we do, the server efficiency of what we do, and the know-how that we have acquired in 2 years of doing so, onboarding clients in various various verticals. So we are very excited from the entrance of Meta to this market, and it's a huge opportunity for us, and it makes our lives nothing than easier, because when we go and we speak with clients, the idea of what we do is not strange to them. It is something that will be more and more regular. It would be in our daily lives, and we would see those AI personas like Meta did. And I'm sure that other big tech players would come and would participate in this dance, and it only strengthens and makes our path shorter more than anything.
Makes sense. I might switch focus to the B2C business. Lots of questions coming through around the receipts and revenue seen this quarter versus the growth we talked about in user numbers, and how they maybe quite match up. I know you talked a little bit about how there's a lag. Maybe if you could just spend a little bit of time on that, and obviously not providing guidance for next quarter, but perhaps what some of those user acquisitions from this quarter might mean next quarter and beyond.
Yeah, well, it's very important to state we have took something that was outside of UNT, the entire user acquisition mechanism. It means that we have a product, and then we want to tell the world, hey, we have this product, sign up. And the entire funnel, the entire value chain of signing up was outside of UNT. To acquire this, or let's start with the reason. Why did we want to acquire this? We had no control on where the ads go. How much do we really pay for the ad versus how much the users really pay, or how many users actually really click this. And the partners that we worked with didn't always have the best of interest for us. So we wanted to own this, and we saw that the general market in this telco-based services still grows. There is a lot of money to be made, and UNT wasn't a market leader. And we asked ourselves, why? How do we become a market leader in this? What do we don't have that the competition has, and vice versa? And we saw that you have super competitive products, really an innovator in that field, all to the way that competitors wanted to license the content from us. And we saw that we don't have in-house user acquisition. So we have decided to go and develop this function within. This gives us the opportunity to not have a class ceiling. We know that we, in every market, can release unleash the full potential of every market in terms of potential users. And we have further control on the future margin, because when you work with a third party that you buy or that you get users from, someone always takes a cut, and we wanted to reduce that cut. So we decided to work directly. Now we work directly with Google they're our user acquisition partner, and we have a full-time team of one to two people now that will be that are doing this acquisition, running the marketing budget. Now, how does it work? We enter a market. Let's take that we said that we released about Kenya, I think, in the last report. That we go to Kenya, and in Kenya, someone pays X dollars. So, I mean, a user pay X dollars to use our services. There is a cost of acquiring him. Google says, "Oh, this guy in the end will give you $5." Just an example. It's not a number in Kenya. This guy in the end of the month will give you $5. Give us $30. And then as we learn the market, it goes down all the way to cents per user. And this is the magic of it. So there is, until you actually penetrate a market and you make a market effective and profitable, there's a learning curve. It could take all the way between 2 weeks and 2 months. And there is an investment associated with this. And we have very experienced personnel in that industry to mark this is profitable, good market, or this is a market that it was a mistake with, so make mistakes, and we scrap it. We didn't scrap markets or meaningful markets in this period. Therefore, all of the investment we have done was also for the learning curve on how to buy, although we brought experienced people. There are also the relationship with Google. It's technical. How the computers speak with each other, the UNT accounts and the Google accounts, there is a learning curve there. So all of that is trained. As we increased our marketing spend, user acquisition spend, we will see revenues coming, as I promised last quarter, and it's fulfilled in this quarter. We expect to see that. We do not expect to spend in the same rate. So I hope this is a calming message, but we do expect to see further revenue growth. We do not want to see it stand still, and we want to be in a place where this department is heaps more profitable, and we have a very clear plan on how to get there. So we do the steps with plenty of confidence because we have competition to learn from, and we have a very compelling product in that industry. I know that some people want specific information, numbers to the cent, but we're not able to give them from competitive reasons and from market reasons. But in a nutshell, we spend money to make money in the most simple way that it is, because we spend money in order to buy users that are with us, for some of them, for years. That's it.
That's a good segue into the next question, just on retention. So you're acquiring customers, it's going up. You'll be doing that more cost effectively going forward. Then just thinking about then retention and how you keep those customers. How do you see retention going? Is this a focus to improve retention? How has that been trending of late?
Yes. So I want to split this conversation to make it very clear. We were speaking on the B2C division, which is direct-to-consumer apps, right? With the B2B, it's a different ballgame. It's a different thing. With B2C, the retention is increasing significantly with the new value that we bring with the AI-based product. No longer just text-based horoscope. You have a fortune teller to speak with. No longer text-based story. You have a grandpa that reads stories for kids, and in the future, we're going to have a cool travel guide that you can speak with about everything before your upcoming trip. People go back to that. It's kids that go back to the bedtime stories, and their parents are giving it to them. Then with the horoscope, we have a variety of interesting users there. And we see the retention rate growing, the churn declining. And of course, we have 500,000 user signups. It's not that we have 500,000 active users in the day after. There is always a churn. People do always unsubscribe, like anyone here that downloaded an app and after 2 weeks decided they don't want to use this app longer. It happens with our apps as well. But it is taken in account in every calculation that we do and projections that we do internally for the revenue, the profit in an X amount of time. There is always a churn associated with it, but we're very happy that as we take a lower churn in consideration, it does qualify. So we take our goals in terms of the churn, in terms of the user retention, and we with better products, more retention. Very easy, and we have better products, and we intend to improve them and to bring more of them. some of the active users that we have are still going on old products that are not the AI ones, but everything that we release about user signups, the new 500,000 signups milestone, it's from the new product alone. This is the future of UNT, digital human-based products, B2B, B2C.
Thanks, Idan. We've got time for another couple of questions. One here, which we know has obviously had a bit of discussion on in the forums. So what is the possibility of a capital raise to expand for growth?
Well, we're a tech company, and the 2 quarters, or the last 2 quarters in particular, of course, represented higher investment, not only in the tech, but also in the customer acquisition costs. And we're aware of that. And of course, I can see the concern after the 2 quarters of higher spend. I can see the concern, but there is no immediate need for cash. No immediate need, and we have a very clear plan and a very clear revenue trajectory that we're going towards. So for now, an immediate term, it's not on the table. Some of these costs, as I said, were one-off in nature, annual payments. So the run rate is, of course, much higher than we anticipated in the last report, which is derived from a very specific calculation, I must say. With additional revenues starting to flow from the digital humans division and growing revenue streams from the B2C business, and we see that grow. And as we see the revenue upticks, we would also see the profits. We expect to see more decreasing levels of cash burn going forward. Again, there would be a balance. Nothing happens immediately, and it's not that tomorrow everything changes, but we are very much aware of our cash balance. It's the first number that I wake up in the morning, that enterprise, and the last number that I think of before I go to sleep. And together with this, it's a very close discussion with our board of directors that together we take these decisions. So as I said, a capital raise is not on the table in the immediate term, and we're very excited for the opportunities that we have on the table, and they have revenue associated with them as well.
Thank you. Last couple we've got here. When can we expect the website to be updated so that when you log in, we have a digital human immediately greet you instead of having to scroll down to find it?
That's a very good question. That's actually something that we're working on. There are some interesting issues in that. Some users, for example, ask us sometimes, why can't I speak with the digital human directly? Why can I narrate to the computer? There are things on every computer, iPhone, phone, iPad, that we all have that are very good, that the microphone doesn't work immediately. So it prompts a question in your browser asking to allow the microphone to work. This is part of the reason of why it's not there yet. It is going to happen. The website in 2024 is going to look differently, not only not completely differently. We love our new branding, but there would be adaptations to the website with the value that that we're bringing, and we really expect to improve it. Although it does serve its goal. We have inbound traffic that understand what we do through the website, but I agree, we need more digital humans on the front, and this is where we're going. And I want to thank the shareholders for the question and invite them for feedback. And I'm sure that everybody knows that if they write to us, either through investor relations or directly, they get the answer and we listen.
Time for one last one, Idan. Just a question about the self-service model. Is it the case that the user will feed in their own content and knowledge base for the self-service model?
Oh, hell yes. So with the self-service model, it is a very simple onboarding process for every client. They go, they choose what they want to do with this digital human, they choose the face, they choose the voice, and then they can either create a conversation or upload their knowledge base. You can take your entire marketing portfolio, or if you're an ASX listed company, you can bring us your entire investor relations portfolio, or your investor relations document, or messaging, and you just upload it as a Word document, or as a presentation, or as a PDF, and our really smart system will just chew it up and you would have a digital colleague, presenter that would be with you. This is a part of the self-service system. This is one of the reasons that it exists. Now we're really happy to release that. By the way, this is the situation today when we work with clients. We tell them, send us your we call it knowledge base. Send us your document that you want to base the digital humans knowledge on. We also define the character. We do a bunch of other really cool things, but we just do it for them. So the self-service would just be a self-service way to do it.
Got it. Okay, we've exhausted our time now, actually gone a couple of minutes over. I'm aware that there are a couple of outstanding questions that we didn't get to. For those people, please feel free to email through those questions to myself, Eric. My name is on the ASX release, or go through the investor relations section of the website, and we'll make sure we get a response back to you. But thank you everyone for making the time today, and Idan, for you making the time your early morning. I will just hand back to you now to close things out.
I really want to thank everybody. I know it's the biggest frustration from shareholders, especially long-term shareholders, is share price. And again, as I said, this is a number that I wake up with and I go to bed with. And of course, we want it to be in a different place. And we really want to, as we grow, for our public listing to be consistent with our growth. And we have made an incredible leap in what this company is, what the product is, a product that sells and that people use, and we intend to grow. And we intend to prove it not only with product, but also with revenues. And I'm sure, and we are sure as the entire management avenue, that we would prove that, and that share price will follow with delivery. These are not easy times for financial markets anywhere, especially not for technology. It derives from various effects, from global situations, and all the way to the interest rates in the US that dictate all of that. And as this would change, we would be on the right place in the right time with a good product to grow in. So we would deliver, and we would keep delivering. And I thank everybody for the support. I understand all of the questions, and I really welcome everybody to send us their messages. We listen, we answer, and we would keep working really hard.